Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel Accounting Buddy. In part 1 of our series on accounting equation, we covered everything you need to know about the foundational concept of double entry accounting system. As the saying goes, practice makes perfect. So in today's video, we will dive into 6 more practical illustrations featuring a wide variety of business transaction scenarios. This will help you master the concept and gain confidence in applying it to the real world accounting situations. So grab a seat, relax, and watch the full video to become an expert in the accounting equation. Let's get started. The accounting equation is a fundamental principle in accounting that expresses the relationship between assets, liabilities, and equity of a company. The principle of accounting equation is based on dual aspect of accounting, which means that every business transaction will always have two aspects, debit and credit. It also means that for all business transactions, for every debit there is a credit of equal amount, and for every credit there is a debit of equal amount. It also means that the total amount which business owes to the outsiders plus the owners will always be equal to the assets owned by the business. We can express this understanding into a mathematical equation displayed on your screens. Assets are always equal to liabilities plus owner's equity, or this equation can also be expressed as owner's equity is equal to assets minus liabilities. This relationship is known as accounting equation. In this slide, we will learn the technique of preparing an accounting equation from a business transaction. First of all, analyze the business transaction to find out the effect of the transaction on the movement in the value of assets, liabilities, or capital of the business. Figure out whether the transaction effect will result into increase or decrease in the value of assets, liabilities, or capital. Memorize this table. This is the basis on which the accounting equation will be prepared. Final step is to record the effect on the relevant side of the accounting equation. Let us understand the process of preparing accounting equation with some business transactions. PK started his business with a cash amounting to INR 90,000. Now if we analyze this transaction, two accounts which will be affected are cash and capital. Second step is to figure out whether as a result of this transaction, the value of these accounts will increase or decrease. In our example, as a result of this transaction, cash, which is a current asset, will increase, and second, the capital will also increase. I hope you have understood this two-step approach. Now let us take second business transaction. PK purchased goods worth INR 8,000 from BBC company on credit. In this business transaction, the two accounts which will be affected are stock and the second account is liability. Second account in this case is liability because the goods are purchased on credit. As a result of this credit purchase of goods, stock, which is a current asset, will increase and the BBC company will become a creditor, and therefore the liability will also increase. The third transaction which we will consider is that the goods costing INR 3,000 are sold for a cash of INR 7,500. If we analyze this transaction, cash and revenue accounts are affected, and the cash, which is an asset, will increase and the revenue is earned, therefore it will also increase. In the same transaction, cost of goods sold, that is the COGS, and the stock accounts are also getting affected. Expense will increase being the cost of goods sold, and the stock being the asset will get reduced. Now let us consider salary of INR 2500 paid in cash as our fourth transaction. If we analyze this transaction, the two accounts which are getting affected are salary, which is an expense account, and the cash, which is an asset account. With this transaction, expenses will increase, and since the salary is paid in cash, cash is an asset which will get reduced. If required, please rewind the video to understand this example again. Accounting equation concepts understanding will make a solid foundation for mastering accounting. Just to repeat and conclude what we have learned in the previous slide, always remember to find out the impact of a business transaction on the accounting equation, identify the bucket of the accounting equation it is affecting. Following the two-step approach through which we have analyzed and identified through four business transaction examples in the previous slides. That is, whether it is affecting the assets or liabilities or equity. And by now, we very well know what are assets. They include both current assets like the cash, bank receivables, prepaid expenses, etc., and also non-current assets or fixed assets like plant and machinery, building, furniture, etc., owned by the business. And the liabilities include creditors, outstanding expenses, bank loans, etc. Owners' funds include capital contribution and profit earned or loss incurred by the business. Also remember, assets are always have a debit balance. If the value of asset is increasing, debit them, and if the value of the asset is decreasing, then credit them. If left hand side of the accounting equation is debit and is equal to its right hand side, that also means that the liabilities and the capital will always have a credit balance. If the value of the liabilities or the capital increases, then credit them, while if the value is decreasing, then debit them. Always remember this equation and its fundamentals. Mr. Tolley starts a business and had under mentioned business transactions. Transaction T1, he started his business with a capital of 20,000. In this transaction, business has received cash from Mr. Tolley towards his capital contribution. Cash is an asset of the business and capital is the amount which the business owes to Mr. Tolley. Therefore, 20,000 cash being current asset will appear on the left hand side of the equation under the head assets, and 20,000 will appear under the head capital on the right hand side of the accounting equation. At this stage, business holds only cash of 20,000 under assets. Under transaction number T2, Mr. Tolley purchased office furniture for 1,500. Two accounts which are getting affected are first assets as the furniture is purchased, and second again the assets as the transaction is settled by cash. Since both the accounts affected are assets, both amounts will appear on the left hand side of the accounting equation. Assets, that is the furniture, will increase by 1500, and at the same time the cash, which is also an asset, will be reduced by 1500. Post transaction T2, there is a new balance of cash 18,500 and furniture 1,500, totaling to 20,000 of assets on the left hand side and a capital of 20,000 on the right hand side of the accounting equation. Under transaction T3, Mr. Tooley purchased goods worth 3,000 on credit. Two accounts which are getting affected by this transaction are number one stock and number two creditors, as furniture is purchased on credit. 3,000 will appear on the left hand side as the stock has increased, and the liability of 3,000, which has also increased, will appear on the right hand side of the accounting equation. Now the new balance of accounting equation post T3 transaction will be 21,500 cash and 1,500 furniture, totaling to 23,000 of assets on the left hand side and a capital of 20,000 plus a liability of 3,000 on the right hand side of the accounting equation. At this stage, the business will have 18,500 of cash and 1,500 of stock under the head current assets. The accounting equation balance after 3 business transactions discussed in the previous slide is displayed on your screens. Total assets on the left hand side of the accounting equation amounting to INR 23,000 is equal to the sum total of the liabilities of 3,000 and equity of 20,000 on the right hand side of the accounting equation. Transaction T4 on your screens is Mr. Tooley purchased goods worth INR 2000 in cash. If you analyze this transaction, stock and cash are the two accounts which are affected by this transaction. Since both stock and cash are asset accounts, the effect of this transaction will be on the asset side of the accounting equation only. Stock will increase by 2000 and the transaction being settled by cash, cash will be reduced by 2000. Post T4 business transaction, the new balance on left hand side will be cash 16,500, stock 5,000, furniture 1,500, amounting to a total of 23,000 of assets. And on right hand side also the total is 23,000 comprising of 3,000 of liabilities and 20,000 of capital. Transaction T5 on your screens is goods costing 2,000 are sold on credit for 3,500. If we analyze this transaction, the accounts which are affected by this transaction are first the receivables as the goods are sold on credit, second the stock, and the third one is the equity. Two accounts, receivable and stock, being the asset accounts, will affect the left hand side of the accounting equation and the equity will affect the right hand side of the accounting equation. On asset side, receivables will increase by 3,500 because the goods are sold on credit. Stock with 2,000 will be reduced again on the asset side, being the amount of cost of goods sold. The third effect will result into an increase in the equity by 1,500, being the profit of the transaction. Post T5 transaction, new balance on the left hand side of the accounting equation will be cash 16,500, stock 3,000, receivables 3,500, furniture 1,500, totaling to a sum of 24,500 as the total assets of the business, which is equal to the sum total of the liabilities of 3,000 and the capital of 21,500. Now, after these 5 business transactions, if we translate the latest accounting equation into Mr. Tooley's balance sheet, it will appear as displayed on your screens. Left hand side, that is the total assets are 24,500 and the right hand side, that is the liabilities and the equities are also 24,500. Hope we have understood the concept of accounting equation, its formation from the business transactions and its link to the balance sheet of the business. Old balances of accounting equation carried forward from the previous slide are displayed on your screens. Left hand side of the accounting equation represents the total assets of the business amounting to INR 24,500. While the right hand side of the equation has got 3,000 of liabilities and 21,000 of capital totaling to INR 24,500. Transaction T6 is on your screens. Rent of 2,000 and salary of 6,000 are paid. If we analyze this transaction, both rent and salary are business expenses and they will affect the profit or loss of the business. And thus in accounting equation terms, they will affect the capital of the business, and since it is paid in cash, on the asset side it will impact the assets. Cash will be reduced by 8,000 and the capital will get reduced by the same amount. Post T6 transaction, the new balance on the left hand side will have 8,500 cash, 3,000 stock, 3,500 receivables, 1,500 furniture, totaling to 16,500 of the total assets of the business. And on right hand side also the sum total of liabilities of 3,000 and the capital of 13,500 is 16,500. Transaction T7 on your screens is INR 1,000 paid to creditors and INR 2,000 received from the debtors. If we analyze this transaction, three accounts are affected. Number one, creditors, number two, debtors, and number three is cash. Debtors and cash are assets while the creditors are liabilities. Net increase in cash will be 1,000 because 2,000 cash is received from the debtors and at the same time 1,000 is paid to the creditors. Further, debtors, which is an asset, will be reduced by 2,000 and the creditors on the liability side will be reduced by 1,000 as the cash has reduced the outstanding balance of the creditors. Post T7 transaction, on asset side, the cash is increased from an earlier 8,500 to 9,500. Stock remains the same at 3,000. Debtors or the receivables have been reduced from the earlier 3,500 to 1,500. Furniture remains the same at 1,500. All put together, the total asset side is INR 15,500. And on right hand side, liabilities are reduced from earlier 3,000 to 2,000 and the capital remains at the same level of 13,500. The right hand side total is also 15,500. Old balances of the accounting equation carried forward from the previous slide are displayed on your screens. Left hand side of the accounting equation represents the total assets of the business amounting to INR 15,500. While the right hand side of the equation we have 2,000 of liabilities and 13,500 of capital totaling to INR 15,500. Transaction T8 on your screens is Mr. Tolly withdraw an amount of 1,000 for his personal use. If we analyze this transaction, the two accounts which are getting affected are cash on the asset side and the drawings which will affect the capital on the right hand side of the accounting equation. Cash will be reduced by 1,000 and the capital will also get reduced by 1,000. New balance of the accounting equation post T8 transaction on the right hand side will be 8,500 cash, 3,000 stock, 1,500 receivable, 1,500 furniture, totaling to INR 14,500 as the total assets of the business. And on the right hand side, we have the sum total of the liabilities of 2,000 and the capital of 12,500. Again, the total is 14,500. Now, if we translate the accounting equation of Mr. Tolly into his balance sheet, this is how it will look like as displayed on your screens. Please do not think too much about the balance sheet. Just understand the relationship between the accounting equation and the balance sheet at this point of time. Now, on liability side, we have liabilities of 2,000 and the capital of 12,500, which is net of drawings of 1,000. Now the asset side, we have cash 8,500, stock 3,000, receivables 1,500 and the furniture also 1,500. Total of both the sides of the balance sheet is 14,500. Post T8 transaction, the accounting equation is displayed on your screens. The total assets are 14,500 and they are equal to the sum total of 2,000 of liabilities and 12,500 of capital. Or in other words, owner's equity of 12,500 is equal to the total assets of the business 14,500 less the liabilities of 2,000. I sincerely hope we have understood the concept of accounting equation and its relationship with the balance sheet. Let us further strengthen our understanding of accounting equation with few more business transactions. Transaction T1 on your screen is Polly started the business with a cash of $45,000. If we analyze this transaction, the two accounts which are getting affected are the cash and the capital account. Cash will increase by $45,000 and the capital will also be increased by $45,000. The transaction number 2 is on your screens. Polly purchased goods worth $5,000 on cash. The two accounts which are getting affected by this transaction are the stock and the cash, and both are asset accounts. Stock, which is an asset, will increase by $5,000, and since the transaction is settled by cash, cash, which is again an asset, will be reduced by $5,000. The new accounting equation post T2 transaction will have $45,000 as assets and $45,000 as capital. Transaction T3 on your screens is Polly purchased two computers for office use on credit from Cooley for $2,000. If we analyze this transaction, two accounts which will affect are assets, that is the computers purchased, and the second is the creditors, which are the liabilities of the business. Assets, that is the computers, will be increased by $2,000 and the creditors will also be increased by $2,000. Post T3 transaction, the new accounting equation balance will be $45,000 of current assets, $2,000 of fixed assets, totaling to $47,000 of total assets of the business. And on right hand side, we will have $2,000 of liabilities plus a capital of $45,000. Balance of the old accounting equation carry forward from previous slide is displayed on your screens. The transaction T4 is also displayed on your screens. Polly sold goods costing $10,000 for $18,000 in cash. If we analyze this transaction, cash, stock and capital accounts will be affected by this transaction. Cash, which is an asset, will increase by $18,000. Stock will be reduced by $10,000 being the cost of goods sold, and the capital will increase by $8,000 being the profit earned on this transaction. Post transaction T4, the new balance of accounting equation will be $53,000 current assets, $2,000 fixed assets, totaling to $55,000. And on right hand side we have $2,000 liabilities and $53,000 capital. Transaction T5 on your screen is Polly paid $1,000 to Kohli as partial payment for total amount due to Kohli. This transaction will affect cash, which is an asset, and the creditors, which are the liabilities. Cash, which is an asset, will be reduced by $1,000 and the creditors, which are the liabilities, will also reduce by $1,000. Post this transaction T5, the new accounting equation will be $52,000 current assets, $2,000 of fixed assets, totaling to $54,000 of total assets of the business. And on right hand side of the accounting equation, we have $1,000 as current liabilities and $53,000 of capital. Let us discuss illustration number 7. Transaction T1 on your screens is Rolly started business with cash of $25,000 and a deposit of $45,000 check in the bank, and also transferred furniture worth $5,000 for the business use. Now if we analyze this transaction, the four accounts which are affected by this transaction are: first the cash, second the bank, third the furniture, and the fourth one is capital. Cash, bank and furniture, which are the assets, will affect the asset side of the accounting equation, while the capital will affect the right hand side of the accounting equation. On asset side, cash will increase by $25,000, bank balance by $45,000, and furniture by $5,000. And on right hand side of the accounting equation, the capital of the business will increase by $75,000. The transaction T2 on your screens is Rolly purchased goods on credit from Tolly for $40,000 and for cash $25,000. If we analyze this transaction, three accounts which are getting affected are stock, cash and creditors. For cash purchases, both stock and cash are assets. Therefore, cash purchases will affect only the left hand side of the accounting equation. Stock will increase by $25,000, and since the transaction is settled by cash, cash will be reduced by $25,000. Now, for goods purchased on credit, stock, which is an asset, will affect the left hand side of the accounting equation, and Tolly will become the creditor as the goods are purchased on credit, and it will affect the right hand side of the accounting equation. Stock will increase by $40,000 and the liabilities will also increase by $40,000. Post T2 transaction, the new accounting equation will have $45,000 of bank balance, $65,000 of stock and $5,000 of furniture, totaling to an amount of $115,000 of total assets on the left hand side of the accounting equation. And the sum total of the liabilities of $40,000 and a capital of $75,000 is also equal to $115,000. The transaction T3 on your screens is Rolly withdrew $10,000 cash from bank for the business purpose. If we analyze this transaction, the two accounts which are getting affected are cash and bank balance. Since both cash and bank balance are asset accounts, the effect will only be on the left hand side of the accounting equation. Cash will increase by $10,000 and the bank balance will reduce by $10,000. Post T3 transaction, the new accounting equation will have $10,000 of cash, $35,000 of bank balance, $65,000 of stock, $5,000 of furniture, totaling to a sum total of $115,000 of total assets on the left hand side of the accounting equation. And on right hand side, we have $40,000 of liabilities and $75,000 of capital, which is again equivalent to $115,000 in total. Let us now answer few questions related to the topics which we have discussed just now. Question number 1. What is the accounting equation? The answer is assets are always equal to liabilities plus equity. Question number 2. What do assets represent in the accounting equation? Answer is assets represent resources owned by the business. Question number 3. What are liabilities? Answer is liabilities are obligations or debts owed to outsiders. Question number 4. What is equity? The answer is equity represents the owner's interest in the business after liabilities are subtracted from the assets. Question number 5. In accounting equation, equity is equal to, the answer is equity is equal to assets minus liabilities. Question number 6. How double entry accounting supports accounting equation? The answer is double entry accounting ensures that every transaction affects at least two accounts, keeping the accounting equation balanced. Question number 7 on your screens is what happens when a business takes out a loan? The answer is liabilities increase and the assets also increase, keeping the equation balanced. Question number 8. If a company earns revenue, how does it affect the accounting equation? The assets increases and the equity also increases. Question number 9. What effects does pay off a liability have on the accounting equation? The answer is assets decrease and the liabilities also decrease, keeping the equation balanced. Question number 10. What role does the accounting equation play in financial statements? The answer is accounting equation translates into balance sheet, which shows the financial position of a business. Question number 11. How do dividend impact the accounting equation? The answer is dividend decreases assets and also decreases the equity. Question number 12. How does depreciation affect the accounting equation? The answer is depreciation decreases assets and it also decreases the equity of the business. In our upcoming video on 21st December 2024, we will review the accounting equation and dive into another illustration. Additionally, we will explore how items like outstanding expenses, prepaid expenses, accrued income, and unearned income impact the accounting equation. We will also work through 4 practical examples to identify the missing elements among the 3 key components of the accounting equation, that is assets, liabilities, and equity. If you enjoy the content of my channel and appreciate my teaching style, please like, comment, subscribe, and share my channel Accounting Buddy. Don't forget to hit the bell icon so you never miss an update. Thank you and see you again.